trade, August, week 3, 2020. It is the Fed minutes on Wednesday, and then we have monthly OPEX to end the week. The S&P 500 August options only trade through the end of the day on Thursday and expire, with the average open on Friday using the ticker SET, S-E-T. Here is our 5-minute chart. I like to look at a 5-minute intraday chart, but I take my daily and weekly levels that I think are most important. I put them on there. I also note where my simple moving averages are at. Those have to be readjusted each day. And then I watch how price interacts with those and trade accordingly. So here is the intraday 5-minute shot of what was going on Friday. Here was our initial balance period. Initial balance, I note that with IB in tweets. So the IB low, initial balance low, is our low that we set in the first hour, and our IB high is the initial balance high that we set in the first hour. So the low to the high in the first hour of trading. You can see that we set our initial balance low right off of the open, and that held all the way to the end of the day when it finally made a little break. We broke right out of our initial balance high shortly after setting it, and we spent most of the day holding above it until we rolled over into that little afternoon sell-off. The initial balance high fell right in line with this gap fill at 33.73.23. This was our upper line in the sand this week. There's a gap, the final gap that stands before us before we get to the all-time high that ran from 33.60 to 33.73. And that was, sort of our upper and lower line in the sand for this week. And you can see that, we held above it for most of the day, and when we came down to the low of the day, we held just above the entrance to that gap. We reversed and we got a little short covering rally into the close and closed just below the gap. I would have liked to have seen us close above 33.73.23, but it's okay that we didn't because of this. When we look at, we're supposed to have the weekly chart next. When we look at the weekly chart, we see that we got a new weekly closing high in our string of weekly closing highs since making the March low, and a higher close above last week. Last week we closed at 33.51, but we are still in a second place spot to the weekly all-time closing high that was set in February week 2. So I thought that would be a nice, neat little package for us to wrap up if we had closed above 33.80 this week to take out the weekly all-time closing high, and then it would have been in the bag for us to make an all-time high. But they wanted to leave a little bit of suspense for us, so we didn't quite make it. But we still have we're still gunning for second. We're still in second place, gunning for a new weekly all-time closing high against this one here. And one other thing that you could also see from what was going on intraday was that our intraday high on Friday, was falling short of getting over what would get us that weekly all-time closing high at 33.80.16. And they tried and they tried and they tried, and then we rolled over from there. And we had some help from CNBC interviewing some market bearish people like Maxine Waters, for instance. She really helped us get the ball rolling to the downside. I'm sure it's just a coincidence, but the market does love to sell when CNBC gets her on for an interview and she gets really going on a good rant, and the talking heads couldn't even get a word in edgewise with her. It was a great interview, but it did unfortunately get us to help us to sell off. So for those that were holding calls into that, no bueno. Anyway, when we look at our roadmap chart, we see that here was this collar that I suggested we might wind up getting settled into this week between 33.50 and 33.75, and indeed we did by closing just below 33.75. So I think that had more to do with why we fell shy of this gap than anything else, was that there were a lot of bets at stake holding down the 33.75 level with short calls, and a lot of bets holding up the 33.50 level from underneath with short puts. So we were destined to close inside this collar of 33.50 to 33.75 this week. Our 10-day simple moving average is moving up very quickly on our heels. It's going to be up in here around 33.57 on Monday, unless we open up Sunday night and have some sort of blood-curdling, screaming sell-off on Sunday night and open lower, in which case this line would flatten out and maybe even start to tick down. But if we open up flat or any higher, this 10-day simple moving average is going to pull right up into here. It's going to be up around 33.57 or so, and then it's just going to keep on rising. So if we sit sideways on Monday in this range still with the 10-day moving up on our heels, we got to make a move on Tuesday. And that move on Tuesday is either going to be to go higher and get away from the 10-day, or it's going to be a flat to lower open and then by default opening below the 10-day. And then we would get our next step down, which would be to the 20-day. What's going on with the 20-day? That's moving up very quick. By Monday, it's going to be above 3,300. It closed at 32.96 on Friday. It moves about 7-8 points a day, so it's going to be up above 3,300 on Monday, and it's going to be up around here on Monday. And then by Tuesday, it's going to be up inside this second gap that's down below us. The first gap is this one that we set last week at Tuesday's close, and then had a big gap up open on Wednesday, and we have not traded below Wednesday's low yet since setting that gap support. So if we were to come in and on Monday and maybe trade down and break the 10-day, maybe we're going to fill this gap, maybe close here on Monday, and if we want lower on Tuesday, maybe we'll come down and test into this gap and reverse this second gap, because that's where the 20-day will be on Tuesday. Now, that's because everybody needs more information about where we're going to go if we sell. If we're going to go to the upside, if we just gap up, open on Monday and go, I think that we've got a rally in store to get as high as we can before those Fed minutes come our way on Wednesday, at which case maybe we will slow down, digest what was said in those, inside that meeting, read those minutes, and then decide if we're going to pull back or continue higher from there. But I do think that there will be a speed bump in the middle of the week with those Fed minutes. Okay, so one more thing I just want to go over here. Here is the daily chart. This is the roadmap, but with everything taken out of it, just looking at the simple moving averages. Here is the 10-day line. Here is the 20-day line, the orange line, and then here is the 50-day line. You can see that we have not traded below the 20-day simple moving average since we regained it at the end of June, the beginning of July. Why would we break it now? Okay, when we're so close to making an all-time high. If we did break it, then we would sell off 100 points from the break of the 20-day simple moving average to a test of where the 50-day is at. And I do think that if we did get that kind of a deep pullback, there would definitely be buyers sitting there at the 50-day, ready to buy, and we're going to have a 200-point rally up from there to get us to 3,500. That's the way I think that would go. But things never go as neat and simple as that. So if all we do is, if we just gap up open on Monday and go, that's one scenario. If we open and sit sideways and then maybe on Tuesday, test down the 10 and the 20-day and then go, I guess there is no other or than that, but just to show you where things are at, and just to show you, for people that are sitting there thinking, well, why can't we pull back to 2,800? Well, that's because we'd have to break all the simple moving averages, and the simple moving averages show you that we have not made a break like that since coming off of our low in March. Okay, that's that. The final thing I want to show you in this version, which is about the 4th or 5th version of this weekend video so far, is the levels list. I always put this out for people that want to just have something to look at on the go, and also for people who just don't respond well to charts. They respond better to spreadsheets and numbers. Here is where we closed on Friday at 33.7285. We are in breakout mode once we get into 33.80 and above. There is no sense in shorting this. If you don't want to be long this, that's fine. Just let it play out. And here are our levels up, and I've started to include some new levels for new all-time highs. Once we get above 3,400, we have an ES level to resolve with their all-time high. That would take us right now to the 3403 to 3004 or so mark. But above there, we start getting into the 80 handle rule playing out. We try to get from 3,400 to 3,450. Once we get to 3,450, we've got the 80 handle rule playing again, which is what we're in right now with the 3,300 handle. Something to justify us getting to 3,480 would be a couple of measured moves that we can also put in here. ×2 up from the July low to the August low would get us to 3,468. ×2 up from the July 14th low, the July 14th close. That's the last time we closed below 3,200, to the fill of the big gap that we finally finished off after trying for 2 months, the whole summer, to fill it. We finally filled it in August week 1 at 33.3775. So times 2 up from that last close below 3,200 to filling the gap, we get us a 34.78, and at 34.78, that would be our shot against 34.80. And we know that if we get above 34.80, we try for 3,500, and there's some more stuff on here that you can look at. If we come in flat on Monday, we're looking to see if we test and hold above, maybe above Friday's low, or if we get down, and stay inside this gap, the gap from 33.60 to 33.75, or do we test the 10-day, and if we break below the 10-day, we go into neutral to bearish territory. I think you can still buy the dips all the way down to 33.51, but below 33.51 we have a sell. If we hold 33.51, if you want to wait for the regain and hold of the 10-day, or if you buy this dip and we reject the 10-day, we could come back down and possibly break that 33.51 level. And then we are definitely in a sell from there. And our sell would take us from 33.51 to the low 3300s over here. We have all these other levels that we would get through, but ultimately we would be looking for a test and hold of the 20-day. If for some reason this market is out for blood, I do not think that's going to happen, but if it does, it is a 100-point drop from the 20-day to get to the 50-day. Obviously, there'd be a lot of chop to get here. We could trade down to 32.80 and play some 80-handle rule games there, work our way through to the band of support and resistance from the end of July, 32.51. There's, all these other levels that we get to and chop around at, but ultimately, the 50-day simple moving average starts rising above 3,200 this next week, and that's what we would be shooting at, is the 50-day. Okay, I hope this video helps you out. If you have any questions, just send me a direct message. Have a great rest of your weekend. As always, good luck and good trading.